What's going on, guys? It's Justin at InFocus Investing, and today we're going to be discussing one of my favorite topics, which is trading psychology. What goes on in here is number one. Anyone with experience trading will tell you that once you understand the charts, supply and demand, support and resistance, indicators, moving averages, and all those analysis methods and tools that we use to get an edge in the market, once you understand that, the hardest part is mastering yourself and your psychology. And that's what we're going to be discussing today. The goal is to consistently improve our trading skills, our intuition, and our self-awareness while we're participating in the market. All right, so these are some ideas of questions to ask yourself before, during, and after a trade. So we're going to go through some of them, and I'm going to give some examples of how they've applied to my life, and hopefully that can help you in your trading journey. So first question that you want to ask yourself is, what kind of trade am I taking? So is it a scalp, which is a quick intraday trade, or am I swing trading, which is a multi-day or maybe multi-week hold? This is really important to understand because everything else revolves around, are you following your plan? Another important piece to the plan is, what's your position sizing? So if you're scalping, do you have a set amount of contracts or shares that you're taking, or amount of dollars that you're risking on this trade? And if you're swing trading, are you taking a full position all at one shot? Are you building a position up? Are you scaling in? Those are some questions that you want to ask yourself, and always make sure that it falls into your own risk management plan. I do have a video on risk management, so feel free to check that one out. Another really important question to ask yourself is, am I entering a trade because of FOMO? FOMO stands for fear of missing out. So sometimes you will go into a trade that doesn't necessarily fit your plan, or that you might not have a plan for at all. So that usually means that you're FOMO trading. You just don't want to miss out on the gains. You don't want to miss out on the potential. That is a FOMO trade. Not having a plan, not having defined risk. All those things will get you into trouble in the market. The other really important question to ask yourself is, am I blindly following somebody else's idea? Do I follow a trader on YouTube, on Discord, on an alert service, on a chat room, a friend who gave me an idea, a friend of a friend who knows the market? If you are, then you need to understand why you're taking that idea. Does that idea match up with your risk management? Does it match your trading style, your personality? All these things are super important to consider before you follow somebody else's idea. When I started trading, I was signing up to alert services, trading chat rooms to try to make a quick buck without really understanding what I was doing. I would end up winning sometimes, losing sometimes, and I didn't understand why. That is something that I really stress with anyone that I talk to about the market, is understanding what you're doing in the market. Don't just blindly follow somebody else, because yeah, it might work, but ultimately you want to learn how to fish on your own. And that's ultimately my goal, is to help people understand trading on their own, be able to bring ideas to the table, see things that I don't see, and we keep each other sharp and accountable. This question falls in line with your trading plan. Do I understand fully the risk that I'm taking on this trade? If you're trading options or shares, do you know what your max potential loss is? If everything went wrong, what is your maximum potential loss? If you're not comfortable with that, then you have to reconsider your trade, or put yourself in a position that those risks are limited. All right, so these questions get a little bit deeper into your psychology and understanding your personality. So one thing to consider is, am I on a winning streak or am I on a losing streak? If you're on a losing streak, you might be taking trades out of revenge trading, which means that you're just trying to make up the losses that you just had. And if you're on a winning streak, you may just be taking trades based on your confidence level and not necessarily the trade plan or the setup that you have in front of you. So these are things that you want to understand about yourself and where you're at in this particular moment before your next trade. So have you been in a losing streak? Have you been in a winning streak? How is that affecting your psychology? If you're really happy after a win, probably not a good time to trade. If you're really down and upset about a loss, probably not a good time to trade either. You want to wait until your emotions are balanced and you're able to look at the market from an objective point of view and not out of your emotional lens. So winning streaks and losing streaks can do that to a trader. Another thing that's really important to consider, and it's not necessarily reflective of the markets at all, is, am I stressed out? Is there something major in my life that's going on that's putting me in a bad mental state? If you have these types of things that are going on in your life, you should probably just walk away from trading for a couple days or a couple weeks until you get these things ironed out, because they will affect your trading performance. Am I trading due to boredom? Do I just want to see some action? Do I want to get in a trade because I want to try to make some money real quick? These are all things that will generally cause us to lose money. Boredom trades, forcing trades, that's something that you want to avoid. So you want to ask yourself that question before you take a trade. This goes into trade plan. Is there a clear opportunity here? If there is a clear opportunity, then you have to construct a trade plan. What's the idea? What's the thesis? Where are you getting in? Where are you getting out? Having the trading plan will help you avoid a lot of the psychological toxicity that can form when you are in a trade. The other thing is how long you're in the trade can start to psychologically damage you as well. So if you take a trade expecting it to be a quick day trade and you end up holding it for longer than 5 minutes, 10 minutes, an hour, whatever it was that goes over your normal time period, that psychological stress will start to eat at you. Before you get into that trade, whether it's a scalp or a swing trade, you have to understand the time frame that goes along with that trade as well. If it's a swing trade, it's usually going to take a couple days or maybe even a couple weeks to develop fully. So you have to be prepared to have that waiting time while things start to work out or don't work out. And if you happen to be in a swing trade and your psychology is starting to get at you, you should probably just close the trade. One of the things that you can do to avoid that is, again, having the plan. But the problem is that we're not robots. We don't operate that way. And that's why we have to keep these questions in the front of our mind while we're trading, because it allows us to filter out our emotions. And once we filter our emotions, then we can have a good lens on the market and say, okay, cool, there's opportunity here, there's not opportunity here. I'm just forcing it. I'm just FOMO trading. I'm just trying to follow a trade idea. So those are some questions that we can ask ourselves before or during a trade. Let's talk about steps to take. The number one step to take is journal everything. Everything you do in the market, journal it. Everything you think in the market, journal it. Everything you see or you think you see, journal it. This is going to make your trading 1,000 times better. If you get nothing else from this video, get this part down. Journal everything, and details matter. Get as specific as possible. You want to understand what's your thought process before the trade, during the trade, after the trade. What are your emotions before the trade, during the trade, after the trade? Were you anxious to make a trade? Were you patient? Did you follow your plan? Did the plan work? Did the plan not work? Why did the plan work? Why didn't the plan work? These are all things that you have to journal every day that you're participating in the market. The ultimate way to become a better trader. The reason why this is so powerful is because writing it down, either pen and paper or on your computer, is going to solidify the things that you do well, the things that you don't do well, your areas of opportunity, and areas where you have to completely avoid. So having these questions to ask yourself is just a guideline to go from, and you can take it where you want to. So basically you want to write down, what's the result of the trade? Was it profitable? Was it a loss? Was it flat? Did you follow your plan? And most importantly, what can you do on the next trade? Was that your ideal setup? Did you feel comfortable holding a swing trade for that many days? Did you feel comfortable with your scalp trading? Did you feel comfortable when the market went against you right away? How did you feel when you saw a loss as soon as you entered your trade? How did you feel when you saw a profit as soon as you enter your trade? These are all things that you can write down and put it all together in a journal format. There are certain softwares you can use. You can use TraderSync.com, which is a paid software. There's TraderView.com, which has a free software. You can use pen and paper. You can use an Excel spreadsheet, a Word document. You can write it out with a voice memo. That's another really good thing you can do. So one other really important tip that I want to share with you that I didn't put down in this slideshow is talking to yourself out loud is probably the most efficient way to understand what you're feeling. So let's say you're getting ready to take a scalp trade. Before the scalp trade, what you're saying to yourself is this: what am I seeing right now? What's the overall market doing? What is the stock doing? Does it meet all my criteria for my scalp trading plan? If yes, 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 and you get in the trade, now when you're in the trade, is it working? Is it going against me? Is this stressing me out? Should I take the loss? Should I take the profit? Should I cut it at flat? That's usually your internal guidance system telling you to take the profit, to take the loss, or to cut it flat. And this is going to come with experience as well, because at the beginning, you need to have a plan, because you're not going to have your trading intuition dialed in just yet. Over time, you see more and more of the market. You understand your trading psychology more and more. You can trust and lean on that trading intuition a little bit more, because even though you need a plan in trading, you also have to be flexible. So there's no like one rule and one way to do this. You just have to be fluid. The market's in constant motion, and that's the way your brain has to be be as well. You have to understand that things are changing constantly in the market. At this particular moment, this trade might look really good, and then the next minute, something could change in the market, and you have to change your idea. You have to change your plan. So that's something that I want to share, is the self-talk while you're in a trade, before you enter a trade, and after you get out of a trade. So let's say, for example, you exit a trade and it ends up working the way that you thought it did. You might not have extracted the full amount of profits that were available to you, or you might have taken a loss and it would have turned into a winner, or you cut it flat and it ended up being a huge winner. These are all things that you have to write down in your journal and understand this can psychologically damage you more than anything you do with your money. The self-sabotage, the self-doubt, beating yourself up, I should have done this, I should have done that, if only had I done this, those are all things that will destroy your psychology, and it will put a blur in front of your eyes when you go back to look at the market, because then you're going to start seeing things that aren't there. You're going to start forcing trades, you're going to start FOMOing trades, and these are things that you want to avoid at all costs. Write it down in your journal, stay present, and stay focused. So some additional steps to take is to write down a set of trading rules that you're going to follow and do your very best to stick to them. This is where the psychological toxicity can come in, is when you have a set of rules and you break them. Even worse, if you break it and it works, you will start to build a habit of breaking your rules. Now, again, the market's very fluid, so there are times where you have to adjust your plan and change with the market, but you want to have a set of rules and guidelines that you can follow, that you can always look towards and say, okay, am I following these rules right now? No. So I need to either stop trading, walk away, exit my position. And you got to understand that the rules are there to protect the money in your account. They're also there to protect your trading psychology. It's to keep yourself accountable. And if you need some ideas on trading rules, feel free to reach out. I'll send you my top 10, which I keep in front of me, and a part of my Discord server. So how do you continuously improve as a trader? Journal, have rules, and stick to them. Rinse and repeat. Trading is all about testing ideas. And most importantly, what you want to do is figure out your trading psychology and your edge. What do you do best? That is going to be the most important thing to figure out, and journaling will help you do that. The other thing that I highly recommend, and what really took my trading results to the next level, is getting around a community of like-minded traders who know what they're doing. This is going to allow you to see, how do traders think on a daily basis? What separates them from the losing traders? So if you can get around a community of people, do that. I do have a Discord server. Feel free to reach out if you're interested. Number 2 is practice sticking to your rules. If you followed your rules and you took a loss, it was a win. That is going to keep you out of trouble in the long run. Being present and focused in the moment of your current trade, your current opportunity, your current trade plan, what went well, what didn't go well. These are all really, really important bits of information that you need to take down and adjust as you go along. And number 4 is repeat this process over and over again. The more screen time you have, the more trading experience you have, the better you will be, and the easier it'll be for you to understand when there's opportunity for you and when there isn't. So I hope you guys enjoyed this trading psychology talk. This is one of my favorite topics. It's something that I struggled with so much. Self-sabotage, not following my rules, going into revenge trading, FOMO trading, all that stuff, you name it, I've done it. And these are all things that I have to keep front of mind. And it's not hard to just boredom trade or FOMO trade, because the market's at our fingertips at all times. You can trade from your phone anywhere you're in the world, whether you're on vacation, whether you're at work, wherever you are, you could be trading. So that could be a really good thing and a really bad thing. Thanks again for watching. So if you want to connect with me, hit me up on Instagram. That's usually where I communicate the most. Otherwise, you can check me out at infocusinvesting.com. And I do have information on the Discord on that website as well. All right, everyone. Happy trading. Take care.